Hello folks, new week, new opportunities, and most important, new liquidity. Hopefully you are doing super good. So do I. So we want to look at what is likely to happen the coming week, and before then I could just first off start with a review of the pairs that I'm yet to look at tonight or today, depending on where you are, and then we can have a short outlook to what is likely to happen next week. So what you're looking at, without wasting much time, is US 30 monthly chart. We can look at it from a bigger frame. We had taken out this low, price came down, retested this breaker, went higher. Above that is an order block, right? And now what we have here on the current price, which is now my concern, is, remember this is a monthly chart. Now we have this monthly FVG here, where price is doing what? Rejecting from. Nothing much there. On the weekly chart, beautiful. Remember, we had this low here, which is the sell side liquidity into a monthly key level, monthly FVG, and then now my eyes are all the way up there. But remember, before we get up here, we have to pass through somewhere. So when you talk about buyers, you want to look at a chart and decide which is the most closest area to target. And as you can see, we have this here, which is my weekly FVG. That is the most closest place where price now. I don't think I'm not interested with the lower price for now, but higher prices. But we cannot achieve that monthly high just by one day. So I want to see price gravitate higher this coming week to this level here. If we shift lower to daily chart, you can follow down here. There's time here. So what you're looking at is a daily chart, and you can see the rejection was beautiful. Price came back once more. This order block respected the upper quad of this order block. When you measure order block body to body, and you can see a price actually respecting the upper quadrant and rejecting from 50%. So we don't have much on the daily chart. If we shift lower to 4H, if you look at this chart keenly, you have to start to see things now. So remember last week, what we did was this. We had this low being taken. I will move here very fast now that we had a review of this one. So this was sell side taken. Price closed above here. That was an order block. And remember from here that this is the point. I sent the charts and I told you now from here I'm thinking of higher prices. Okay, now this being a 4-hour chart, I want to zoom in like this so that you can see clearly. What we're seeing is this liquidity here. The good thing, the liquidity is into the weekly FVG. But before we get there, let's look at the anatomy of this price action here. If we study well, you look at here, that was an FVG. Okay, price went higher, closed above the series of down close candle. That is what? A bullish order block. You know these things, I believe. Other than that, this order block is stronger because it has what? A fair value gap. Change this one here. Yep. Now from here, best case scenario, we want to see body close above here so that we can get our potential order block. So open higher, retest this, then we go to our target. I'm saying that is what, I'm not saying that is what is going to happen, but that is what is high probability before me. But remember, we will always respond to what the market offers. We don't react. This is US 30. We shift to US 100 on a monthly chart. So we hit this SMT down here, price went higher, came back once more, gravitated higher once more again, came back, filled this fair value gap, body close above the series of down close candles, close above there, order block, went higher, came back again, took out this low here, and then rejected. This is what we have at the moment. Monthly chart, nothing much. Weekly chart, you see this, very nice. Very nice rejection there, and then price started to pump higher. Now I'm still bullish on these futures all the way higher, but before there, let's look at what is the weekly the daily showing us. So what happened last week is this that you're seeing here now. Price came down, took out this low here on Monday, and then we hit the whole week expanding higher. So at least this high here with this fair value gap are high probability. See that? So that is a key level. So from a key level to a key level. But you see, we are not going to pump just like that. The best case scenario, we study the 4-hour chart. Good. So 4-hour chart, this is just from last week's markings. I hope you remember what happened here. This was beautiful, right? You enjoyed the ride higher. So we hit sell side, close above this down close candle that took out liquidity, order block, price came there, and then we were here. We were on Monday New York session, we were all the way up. So price came down. See that? Filled the gap there, went higher, came back once more, filling this gap, and then pumped higher, close above here. That is an order block. But now here, there's something that I'm watching. You see, when US 30 is filling this gap, you see US 100 did not do that. And funny enough, it has closed above. See this? It has closed above this down close candle. So this now is a key point to consider as either, depending on what you're looking at, as an order block. Now, price had already closed above and tagged it, then continued higher. Before I react from this one, I want to find something to continue higher. Although I'm bullish, I don't want price to come into this gap again. I want to see it gravitate higher. How it does that, then we will apply our PDRAs to support our narrative. So that is why I will not quickly respond to this one, but I'm geared to respond to US 30. You look at US 100, 500 on a monthly chart. Beautiful, beautiful. Look at that. Very nice, very nice. We also had the same case scenario like US 30. We took that. Very nice there. Price never, you see, it took out, it tagged earlier the breaker, but this, when this was coming down in US 30, this was so a very clean what? Another SMT there. Price when it goes higher, drops down to a key level order block, pumps high again, and now look at what we have here. I took out this short-term low into a key level here. Did you see that? Of course, yes. And then rejection. Now this highs is where my interest is, but let's see if we can get a nearer place to target. Good. Now the reason why you see this one took out this liquidity and then pumped higher, and now we are where? At a key level, weekly key level. I'm not interested with lower prices. My objective now is to see this weekly fair value gap violated for higher prices, so that now we can be aiming this range high. Okay. In daily, all right, so we are dissecting from what last week and what we anticipate to happen this week. So same case scenario like US 100, price came back, filled this gap here, right, from this order block, and then pumped higher. Now we see we are inside a key level. But how did we get up there? We go again to last week. So before going all the way up, you see this? You see how clean that is? Yes, 5370, somewhere there, 0.8. So last week we had this again. We took out that low, then price closed above here. That confirmed our order block, and then we pumped higher. Price came back, filled this gap here. If you measure this gap, you will realize what the anatomy of the gap. Beautiful. Above 0.5 at 0.25, price went higher. So if you've been following keenly, I'm sure you are enjoying this. Right, so what we have at the moment, we had this fair value gap here and order block, and the price did that. Beautiful. In fact, came back there and then went higher. Now from here, so that I can target this relative equal highs or this high, price had already, I'm zooming in so that you can see clearly. You see that price had already done what? Taken out these down close candles that are coming from a key level, that is an order block. Now from here, what I want to see is price opening into this order block. I don't know which day of the week, but if it can open into this order block, then we can see price all the way up there. So in 4 hours, this is what I will be studying. This and US 30 are more probable to play out, but again, remember to always respond to what the market is offering, not what you're thinking or what you are trying to be married to. Never be married to a bias. So beautiful, these relative equal highs are something that I can consider. I'm not interested with this gap here now. If it can close up, open there, down, then pump higher, the best high probable case scenario for me. So that is it for our futures. I want us to look at so we start with the DXY, UNGU, or we can start with gold. Alright, let's do gold. Alright, so we go to a monthly chart. You see gold has been up since May all the way down here. So this one we thread carefully, don't be hurt. Now monthly there's nothing. Weekly, I want you to look at this. What you're looking at is a weekly chart, and we have this liquidity in the form of a fair value gap, and last week took out the previous week high. Look at that rejection there. Okay, Now I might tend to find a setup here, but what I want to see is price opening higher to where? To at least 0.25 or 0.5 of this gap. I want to see it open higher. This is not responding well. So I want to see it open higher to somewhere, either to 0.5 or 0.25 there, so that we can now get down into our internal range liquidity. So from external range liquidity to internal range liquidity. So I'm yet to look deeper into this, but it looks like it is a setup that can play out, but we are not forcing issues. Okay, so all the time move with your key levels. You see that? And you see already price had gone to our 0.25 and then rejected that. This last up close candle, when price closed here, now became an order block. So this does not look like a key level. You see this? But this is our weekly FVG, right? And now when you see price leaving out bodies like this without wicks, that is also a higher probability. It acts more of a magnet to attract price. So I will look deep. I'm not interested with this fair value gap here, because we have a weekly fair value gap. So this is, to me, doesn't count much in 4H. Yep, this is now beautiful. So we already coming from 0.25 of the week, and remember we said, you see all these up close candle before they were broken there, that is an order block. Wicks in higher time frames are order blocks in lower time frames, right? You feel me there? That is something I hope, if you've been following, you've been hearing me talk about that almost all the time. Now I want us to look at this one carefully. So down here to our key level, we had a liquidity, a swing low here. All right, so last week we did this. We took out this short-term high here. Beautiful there. So I want to zoom in here a bit. Good. If you look closer, we have a high, low, higher high. This candle here is what? A breaker. And inside the breaker, we have what? A fair value gap. So primarily, this is what I'm looking into next week. So if this holds, if we get a rejection from there, and then remember this is a 4-hour chart, so you can only look for a setup either when we have a body close below here. So it should reject the FVG, pump lower. The last up close candle before the drop will be our bullish order block. From here now, we can look for a setup to target our weekly fair value gap. It might look very clean, but always remember, we will move with what the market offers, right? Yeah, so that is it for gold. I'm not touching silver because it is not so clean at the moment. All right, so that is gold. We look at Euro JPY. I am in love with this one. Why? Because you remember we've been dealing with this pair for so long, and I believe that we are likely to, get a better setup. So monthly, nothing much. We look at the weekly chart. So we had this low being swept here, then price went higher, came back here last week, tagged this key PDRA there in the form of FVG. So we had a range low and range high, and you see price is so near to this highs than down here. So I am poised to find higher prices from at this level. You see that? So, and you saw me trade this pair last week. So that was the logic. If we move down to daily chart, this was good. So those highs are good. Those highs are good. So we took out this low here to a key level. Price went higher, came back. If you look at this clearly, we hit an order block here. But this was the logic behind taking last week's trade. So when GJ was failed to take this low, previous Thursday's week low, EJ did that. And when it did that, we had what? Price closed above here. That was a clean order block. You see that? So still, so we met our first target, the second target is this, and then the third target up there. So how price behaves is what you are supposed to do. Never ever force a setup. Price will always tip its hand and they give you something to work with. So if you drop to 4 hour, so this is our that SMT for with the GJ. See this one, our order block there. Now because we don't want that, now we have this. What is this? This is our breaker. Okay, low, high, lower, low, all these up close candles, that was our breaker. So price pumped higher, retested once and then left. Now you only be cautious here. Why? Price can decide to wick down to fill this small imbalance and go higher, but most important, take care of this gap here. How you react from this one, if price is coming here and rejecting before you buy, ensure price has closed above here, strong close above here. Why? Because now that will be what? Our potential order block. You see how I reason with the chart? Yes, don't force anything. So we have this as our first target, and then we have this high as our second target. Always be patient, work within kill zones, and ensure you don't trade before news. Wait for or find setups after news has played out. So that is Euro JPY. Good. Now we go to the three elephants, DXY, EU, and GU as we wind up. So on DXY, good. So this is a monthly chart. Good. So what you're seeing here, I want to draw your attention very quickly. Don't want to stay for long here. If we take a fib anchor in this low and take it to that high there, so 1 to 0, you see we are below 50% and we are where? At our optimal trade entry level. This is a monthly chart. Okay, if you look closer, we had a discount PDRA. Price is rejecting. We still have 4 days or 3 days and some few hours for this candle to close. Weekly chart. Good. So I can take off this to work on a clean slate. So on the weekly chart, see we are rejecting the monthly PDRA. Price might go higher, but before it goes all the way higher, where can we target? This. You see that? So we have taken our liquidity into a key level. I anticipate some retracement back to this key level before we drop if we continue our bearishness. So this is our weekly FVG. Right? Daily. So this last down close candle here, price closed above it, order block. Nothing much in daily here. Or in 4H, I want to reduce, yes, I want to reduce that like that so we can know what that represents, you see that? So we had already taken liquidity from a key level, price came back, retested the order block, went higher, then came back, filled this fair value gap here, went high again, came back once more, filled an imbalance here with the order block. See that? And now we have this zone here that price came back, filled. Now for me to go higher, what I'm going to look for is some liquidity, old highs or old lows. You see that? So from here, the best case scenario is to see price do what? Body close. Sometimes I'm telling you to wait for that candle to close, but some of you feel like you will miss an opportunity. No, you will not miss anything. You see those down close candle there? If body closes above there, then we are going all the way to this key level. That is my simple approach to DXY in the coming week. If we can go higher after reaching here, no problem, but at least this is where I'm remember, you only work with what is likely. Okay, it can reach here and then still drop. So from here, I believe this high can be my target before we maybe drop. Euro USD monthly chart. Beautiful. Remember from the masterclass what we had? We talked about this low being taken. We talked about this key level here. Man, we've been just doing well in these pairs. You see that? Yeah. And then the price did what? Expanded higher. If you look closer, I'm still inclined to those highs. But remember, we cannot just move. We can get retracements then before we continue higher. Always responding and not reacting to what the market represents. So weekly chart, beautiful. Power of 3, accumulation, Judas swing, manipulation, expansion higher. So you look clearly here, we have all this noise here, but more so, you see that that area has a very clean fair value gap. So this is a weekly chart. So a small dissection from this, we had this key level here, filled, body closed. I don't know whether you guys follow. Price body closed this candle here. Look at that. And then from there, what are you seeing? Heaviness, right? Now, this is a new week. We want to think fresh. So, remember, DXY is likely to go higher, retrace higher before maybe going lower. But a key level in DXY is bullishness. So, in this case, we took out this high there. That is external range liquidity. So what we have here is our internal range liquidity. You see that? Now I want price lower here. Same case scenario, we can see open high lower, low close. What we are targeting is the lower quarter of this week. See that? So from external to internal liquidity. Daily, this is beautiful. I want you to look at, so this is our weekly fair value gap. I want you to look at this. Yep. So what do you see here? I've said I want price to open higher to go lower. But you look closer, look at what we have here. So when price is opening higher to 0.25 of the weekly wick, I also want to see this fair value gap supporting lower prices to what level? To this level here. Do you see that? Yes. So this is a swing low. We have more stop losses for those who are buying. I think price is likely to hunt them if we can continue higher. So before even we go to 4 hour, I want to see the reaction of this fair value gap. A rejection, good rejection, then we drop lower, because now this is a swing. We have liquidity here, so this one, see that? So that is, and the price might not even reject this low. It can continue lower to what? If you look closer, we have a lower fair value gap here. This low fair value gap, if we go to a weekly chart, you see that? Look at how they are aligning. Isn't that beautiful? So we always have to be careful and know what we are exactly doing. So to me, for euro, open high to go lower, DXY open lower to go high to that weekly fair value gap. So I will not continue lower from here. We want to see the reaction of this daily fair value. Best case scenario, open high and then lower. Yes. This member, I'm giving out my logic, okay? Don't be too fooled that this is going to happen. You have to find logic and accept that. So this is GU. I'm finishing here. I never thought this was going to be this long. GU monthly chart, very clean. See that? And then we have this relative clean highs here. Are you getting that? So best case scenario here, last week we did what? Took out that, and then expansion higher. Do we have anything here on the monthly chart yet? We have this high that has not been taken. That high has not been taken there, so that is the drawn liquidity near weekly. Very nice. If you check this one here, we had this liquidity taken out, price going higher, close below, above this down close candle, order block, this 3, and above the order block we had what? A fair value gap which was tagged. You see that? Then price, there is a fair value gap here. Some of you might be like, yes, it is. You see that? It is there. Very small but supported price higher. That's the power of this PDRAs. We thank ICT for bringing us to the light. So you see this price went higher, came back to what? Last down close candle from a key level, order block, and then fair value gap went higher. You see that? So now this one, the best we can target is this high here, this one, because we are too near here. But I want to see something happen. The reason why I will be cautious on GU unlike EU is because of that. What is that? That is a balanced price range, and the price had already rejected it once, so I don't think we have more reason to come low again. But if it can open to this now new fair value gap, no problem still. But this one I'll be a bit cautious. So from here, now that we have a weekly balanced price range, I'm anticipating higher prices from here. Daily, so that I get satisfied that we are going all the way up the same case scenario. Remember, what we had here is a weekly balanced price range, right? So that is a key level. For me to go high, I want to see price close above, body close strong above the series of up close candle like that. I don't care whether I miss the move or what, but I want, for me to go higher, I want to see it can open lower, tap into the balance price range once, take out this low, but this should be violated up before I think of taking price all the way to these levels here. Guys, I thought I was to take a few minutes, like 2-3 minutes or 10-15 minutes, but you see, that is how far we've come. I love to see things work. I love to see the logic behind everything. So I believe up to this level we have done enough. Let us be patient and wait for the price to bring bring the setups to us. Hopefully you found this insightful, and as always guys, I'm only requesting that you can give me a thumbs high. You can a word of appreciation if you're finding this work useful, and also you can do what, subscribe to this channel. I believe it is touching 1 or 2 lives, and that is what is important to me. I hope that someday you will look back and enjoy the fruits of your labor. This is freely given. Do yourself justice and stand up for the task and take everything seriously. If you don't resonate with my logic, always pass by ICT's channel and learn more about this PDRAs. Hopefully you found something of today's recap and next week's outlook. Until we see each other next week, don't be the liquidity. If you don't see liquidity, you will be the liquidity. Be safe.